Good morning, everyone. Welcome back to my channel. I have a great topic for you guys today. I'm going to talk about my dividend journey and goals and strategy as I'm embarking on my road to 100K. So I'm going to focus on tips, stocks that I'm going to lean upon to grow my portfolio to over 100,000 or six-figure portfolio, and a couple key metrics that I look for in the dividend stock, but most importantly, how my portfolio has been growing in the past 5 years and how I plan on reaching my goal road to 100K within maybe 5 years or less. So if that intrigues you of my thought process, my mind, and how I pick dividend stocks and the way I'm going with my dividend strategy, if that interests you, then watch the video from beginning to end. Like and subscribe to my channel. Share my content. Always remember that past performance does not dictate any future performance, and everything that I'm saying right now is educational purposes only. Do your own research, and I think that's it. Let's let's cut the intro. Let's get it. So as you see right here, my one of my dividend portfolios right here. My goal is to for it to hit six figures, 100,000, and then I want to say that I think my next goal I wanted to hit 250,000, but gotta set goals, attainable, smart goals. And with this, as you see right here, my current balance of my portfolio is $41,838. I just deposited like around $350, $400 on Monday, and I bought some dividend stocks. And when you look at my dividend portfolio, it produces over $1,500 in passive dividend income. Don't have to do anything. Me buying the stocks of these particular companies, it pays me in passive income. I don't have to do anything but just buy the stock and just hold it, right? So as you look at the different metrics so far, my dividend portfolio, it has a yield of 3.59%, has a yield on cost of 3.79%. And most importantly, some key metrics that I'm going to show you guys is that I look at in buying dividend stocks is the dividend safety score through Simply Safe Dividends, the dividend growth. So how quickly a company is increasing their payouts and the percentage of the payouts, and then also going to just show you just the income calendar, and then I'm going to go into detail with certain stocks. So when you look and see my portfolio, I have roughly 34 holdings. I'm not going to go through all of my holdings because it's a lot, but I will go through the top five, not in terms of how large it is in my dividend portfolio. It's probably not a lot, but these five stocks I like. They have great brand awareness that people know either the logo on the emblem, and then and it has great brand recognition. And I know that through up markets, down markets, I can rely on these particular companies, stocks, and slash stocks that's going to just ride me into the sunset that I love invest into. But before we get to those five stocks I that anchors my dividend portfolio, we're going to go through the dividend safety score. So when I look at certain stocks, I'm looking at to see the likelihood of that particular stock or company is going to default on paying their dividend. And so the lower the score, the higher the risk of it. The company may potentially default on paying their dividend. Recently, I think I want to say yesterday or day before yesterday, Intel just cut their dividend. So the importance of understanding the dividend safety score, because as you build your dividend portfolio, so eventually one day live off of in retirement, you don't want to invest into high risky stocks with lower dividend safety score, because then it's putting your income in jeopardy, right? So the dividend safety score is definitely something that I must make sure I pay attention to, and then also for me the dividend growth. And so right here, the dividend growth for these particular companies, as you see, you want to, it's imperative to invest into stocks that actually grow their dividend. Uh, and as you see right here with Simply Safe Dividends, it breaks down like the dividend yield, dividend safety score, dividend growth, and then how much that particular stock is paying me on an annualized basis. And the more I have it reinvesting itself, the more that a lot of these stocks also pay me, and then they also grow. So now we're going to go into the 5 stocks that is in my dividend portfolio that's going to anchor me to my road to 100K 6-figure dividend portfolio. The first stock is going to be Starbucks, which has a 2.06% dividend yield with a safety score of 67. It grew its dividend 8.2% last year, which is above inflation. Love it. Right now, it is only $102 per share. And some key metrics that you, as a dividend investor or just an investor in general, I like to read the notes of a particular stock. I like to read the payout ratio and to make sure it's under 80%. If it's close to higher, close to 8% or more, it just shows you that it's a little bit, that stock is a little bit too risky to be invested into, because basically all of the funds and the revenue that they're paying out, they're paying out more to the dividend and less them keeping some of the revenue for themselves to reinvest in the company to, create different products, R&D, different ways to improve the company. So if this payout is close to 80% or more, just be wary. But just also know that REITs, reinvestment trusts, they're a lot different. But just for regular stocks, as long as it's under 80% payout ratio, then you're pretty much good. If it's like 30-40%, then you really rocking, a solid company that's like, they're making money, they're keeping a good chunk of the money for themselves to grow the company, and as a return, as you being an investor, it's going to grow your portfolio as well, just from owning that company. Just like how growth investors grow their portfolio, like with the Teslas investors of the world. And then a couple other metrics that I pay attention to is the earnings payout ratio. Make sure that it's below 50%. The free cash flow payout ratio, but the free cash flow per share. I'm always looking at that, making sure it's positive, making sure that the earnings per share is positive and has beat the projections. And so these are several of the financials, and then also the dividend stock key metrics that I look at when I'm looking at different stocks. So first stock is Starbucks. The second stock that's going to anchor my portfolio is McDonald's. I own roughly 5 shares of, right here, I own roughly 5.031 shares of McDonald's, and I plan on buying like 3-4 more shares for this year. It costs $264 per share for McDonald's, and most importantly, it tends to grow their dividend roughly 7 to 8% per year, which is right around or above inflation. If we're able to get inflation down to, again, back to the 3% range. And McDonald's it doesn't really need any introduction. It was in Amsterdam when I traveled to Amsterdam, Italy, Spain. It's international. McDonald's is also considered like a real estate company in terms of their model with franchises. And so I love this company. And also it has a payout ratio of 55%, meaning that the rest of the 45%, they are using their revenue to reinvest back into the company to make more money. I love McDonald's. The next company is going to be Broadcom, because if you looked at a couple of my other videos, you know that I have a love for semiconductors. This semiconductor company has a dividend yield of 3.2%. It grew its dividend this past December at 12%. Has a high beta, meaning that it fluctuates very frequently. And the price is $575 per share. I have roughly 2.093 shares of Broadcom. I plan on buying 1 more share of Broadcom, because at almost close to $600 a share, I can't be really dropping like hundreds of $100 because I have other stocks that I want to buy. But right here, you see the payout ratio is 45%, meaning that 55% of their revenue they're keeping for themselves to grow the company. So it's a consistency. There's a method to my madness of me looking at these different stocks to see, like, okay, it has a dividend increase streak of 12 years, has a payout ratio of 45 years. It's less than 80%. Also, the less of the dividend or the payout ratio, the more I know that the company is keeping some of more of the profit for themselves to grow the business, meaning that the business is going to be healthy, and as a result, it leaves room for bigger dividend increases for the future, right? And so again, Broadcom, the semiconductor stock, 3.20 dividend yield, safety score 67. I love it, and with a dividend with a stock price of $575.74. Now, another stock that's in the industrial space that you probably haven't heard of, but I've heard of because I'm in the industrial sector for my job, and I work a lot with machinists and mechanics, and they need these tools to work on the different steam turbines and engines and whatnot. And Snap-on, the provider that provides the tools you need to buy, mics and everything that's needed for a mechanic to machinist to do their job. Snap-on is great. And then also I've seen the truck goes around. Great industrial company. It's been growing its dividend for over 10% for the past 84 years. It has a payout ratio of 35%, which is super low, meaning that this company is profitable. It has been making a lot of money. It's been increasing their dividend over 10%. That's great for us as dividend investors. It only costs $243 per share. And most importantly, with this during a recession, it has also maintained its dividend, meaning that during the last recession from 2007 to 2009, they didn't slash the dividend. So you also need stocks and companies that's going to weather the storm of a bad economic time, that's going to continue to pay you your dividend, because when you 20, 25 years, when you want to live on these dividends, you don't want a company that's going to default on paying their dividends, slash dividend, and what if they cut the what if they cut the dividend? What if they cut Social Security in the future, and you trying to live off your dividends, and just like with the whole Intel, they decide to cut it. No, you want to be able to rely on companies that's going to be there, brand recognition, increasing in revenue. That's companies that are profitable, so that you can live off of those. So again, Snap-on, that's in an industrial space. They deal with like tools, and cost $243. And I love it. And for me, I own currently right now 7.763 shares, and I plan on buying one or two more shares for 2023. That's my goal. Lastly, my last stock that I love is called Union Pacific. If you growing up, if you were familiar with Monopoly, you want to own the Boardwalk and Park Place, and then you want to own maybe the Oranges, St. James, Oriental, blah blah blah. And the next thing I know you want to buy is the railroads. When you invest into the four railroads, you would get $400 when a person land on you each time a person land on you, and so yeah, yeah, it was $400 or $200, or what was $200 or $400. And so for me, I loved owning the railroads because it's a monopoly. Literally, it's only several railroads that we have in the United States or in Canada, and so I love investing in monopolies because they control the pricing that they can make people pay for their goods and services. For the last several years, it's been increasing its dividend 18%. It costs $191.30 for Union Pacific, and I'm most definitely looking to buy some. I honestly was going to buy like $800 worth of Union Pacific for this week. I mean, for this year. But I'm thinking I'm going to buy more. I probably put in about $1,000 to $1,200 to get, because I currently have 2.42 shares of Union Pacific, and I plan on getting this up because yes, it has a actually has a high enough dividend yield. Typically the dividend yield is like in like the 1.2, 1.5, below 2% dividend yield range. But with the news, with the Fed, the minutes that came out a couple of days ago, a lot of stocks have been trending. A lot of stocks have been trending downward, and so this is definitely a great play to get into. So last stock was Union Pacific. And so now we're going to talk about this my dividend portfolio as a whole. So we already know about my dividend portfolio. It's about 41,000, like 500. It's fluctuating right now because the market is going on. But we're going to show you like face first of basically the dividend calculator of basically how I envision my 41,500 3.57, because I think that's 3.57 dividend portfolio with a growth of 12%, because that's what you saw here. Because you saw right here 3.59, and then with a 12% dividend growth, and then I plan on contributing roughly $1,000 per year, which is no, not thousand. I plan on contributing roughly $10,000 per year, which is roughly $833 per month. But let's just say I'm looking to contribute $850 per month, right? And then with a growth rate of, and then let's say what my portfolio is going to look like in the next 20 years. So as you see right here, in 2023, my count value for my dividend portfolio is 41,500. My first initial goal is to build a $100,000 portfolio, 6-figure portfolio. And so as you see right here, by contributing $10,000 per year, I would be able to see 1, 2, 3, 4. I would be able to hit my goal of over 100,000 within 1, 2, 3, 4 years. And so that's that's for me. That's for me investing $10,000 for this year, $850 per month with a return of 10% and a dividend growth rate of 12%. Yeah, and so within 4 years, I could be able to hit about $100,000 portfolio, and then from there, 1, 2, 3, 4, I'll be able to hit my goal for 250,000 within another, I would say, 4.5 years. So right now, there we go, guys. Wanted guys to show you my dividend portfolio, the dividend stocks that I plan on investing into, why I plan on investing into those stocks, and I showed you the different metrics that I use to consider and picking stocks to buy in my portfolio, because there's a method to my madness, and want to make sure that a stock is secure, safe, making money, but also increasing that dividend more than inflation. And for me, my goal is to have $100,000 portfolio as my goal for goal number one, and then goal number two to get it up to 250,000. But you got to hit the $100,000 first, and the best way to do it is to go hard. Just go hard, set goals, bonuses, drive Uber, drive Uber Eats, DoorDash, any extra money, commissions, bonuses, side business, any extra money that I can, I dump into my favorite stocks, my high growth stocks, and then I'll buy some high dividend stocks here and there, like WP Carey and Arbor Realty Trust, ABR. But I'm buying those stocks that that's going to grow my portfolio, stock price appreciation, like the Broadcoms, like the Starbucks, like the Union Pacific, that the dividend yield is less than 2.5%, about 2%, but grows about, let's say, 10 to 15% with a dividend yield, and may grow another 10% in terms of stock price appreciation. And so right here, this is my goal, and that's how I'm going to go about reaching my goal of having a portfolio of 100K. And then once I hit my goal of 100K, then the next goal is to blow past it and hit a portfolio goal of 250,000, and from there on, the sky is the limit. So that's all I wanted to go through, guys. My dividend portfolio, how the steps I'm going to take to hit my road to 100K portfolio, 6-figure portfolio. And so if you like this content, like and subscribe to my channel, share. Hopefully you learned some interesting things. If not, there's other videos you can learn on how to invest, different investment styles, and I hope you guys enjoy your day. And come join with me, subscribe to my channel, and follow me on my journey to the road to 100K.